Let him cook. Let him cook now.
I will be showing you guys a strategy that I use on odd JPY. This is starting to become my favorite pair because of how clean cut it is. It's not difficult to trade, and it gives pretty good setups. So first you want to start on a daytime frame, and you want to see what kind of trend you are in. So as we can see, price has been pushing up, making higher highs and higher lows. Look at these lows, they're getting higher, and the highs are getting higher, right? So this is how this strategy works. You want to set your time zone on UTC4 New York, right? Once you do that, this is what you do. It's simple instructions, follow along with me. So you want to put a vertical line right here on timestamp 0000, the 4 zeros, right? Once you have that timestamp and price is now in this zone right here, passing this, you want to wait for a liquidity run, and then you want to wait for a market structure shift, and you will be able to get into that trade. So let's look at some examples, right? So this right here, we got our first one, 000. Once price hits this, we want to mark out liquidity zones, previous liquidity before this area. So we see we got a high here and a high here. So we can mark this. We can mark this right here. Mark that high right there. So you got this high and this high. Before that, well, after this high gets swept right here, we got it right there, and we got the lows are right here, and we got equal lows right here. Now keep in mind, since the overall trend is bullish, we want to be looking for bullish setups, right? So I'm not really interested in this right here, price sweeping up and dropping. I'm more interested into the buy. As you can see, price, as soon as price takes this liquidity, we run up fairly high. You could have chased this sell, but look at the buy. The buy is more bigger than the sell, right? So let's drop down to a lower time frame. Keep in mind, this is our high liquidity and this is our low liquidity, right? So let's drop down to the time frame. Now here's that same 000 timestamp, and notice what happens when we run these lows. Once we run this low right here, price runs it right here, and we just want to sit back and wait till we get our market structure shift. So we get a stab here, and right in this area you can see that we end up shifting market structure soon after we run that low. We run the low, price comes up, make this high right here, drops lower, and creates a higher high. It doesn't take out this low. In fact, it shifts structures and create a higher high, right? So we will mark this. Upon marking this right there, that is our market structure shift. Upon marking that, what do we see? Well, these two candles right here create a mitigation block. We have a mitigation block. If you don't know what a mitigation block is, I will be uploading a video showing you that, or you can go on YouTube and search up mitigation block. So we have a mitigation block and we have a higher high. So we can look to enter this trade within this mitigation block. Right here, low right there. Stop loss is below this low right here, because this is a higher low, so this low should be protected. And as you can see, when price pulls up and comes back down, it tests it, it never breaks this low, and as you can see, what ended up happening is price rallies up. This trade runs. Let's put a long position on here and let's see how far this trade runs. We would have entered right there, price came in right there, and I would have targeted this liquidity right here because these are equal highs, so we know that there's a lot of potential for price to want to run this. So from right there to right here, you have a 1 to 2, 3, and if you let price run, as you can see, we're sitting at a 1 to 4.5. All right, let's go to the previous day. Go back to the 15 minute. Now, keep in mind, we need to understand what is price doing. Price is in the uptrend. We saw that from the daytime frame, right? So we got our time stamp right here showing 000. We want to mark out liquidity. We're interested in buying. So 000. Let's take this one here. So once price hit this, I want to look to my left and see, okay, where is liquidity? So price has already swept the top liquidity. I want to see, all right, where is the bottom liquidity? And as you can see, give me a second, we got these lows here. That will be our bottom side liquidity. Notice price runs it right here, right? And it rallies up. Now let's drop down time frames and show you how you could have got this. So zoom in for you guys. All right, we got the start right here, 000. Price comes up. We're not interested in selling. We're interested in buying because the higher time frame shows that we're bullish. Price run those lows right here. Once price run those lows, we come up, make this high. Price makes a higher low and break that. This right here will be your mitigation block. Now, there's two things you could have done. One thing you could have done was, soon as you seen this candle break above this, that certifies. Once you see price break above this high and close, that certifies this mitigation block. So that steps. So soon as this candle closed, you will be into this trade. Or you could have waited for a retest. Price runs up and retest this mitigation right here, and then runs up. So let's extend this right, and I want to show you something very interesting of basically what price did. So I always take this as a breakout and I try to get out, and if price never came back to mitigate it, I would look for to enter it again and take the same trade, because it happens all the time. Now, as you can see, we would have entered this trade soon as that candle broke out and closed, and we would have target liquidity. So this would have been an area of interest right here, stop loss right there, and you could have let it run, since you already know in the daytime frame that we are bullish, so price would tend to run. So here to there, you got you a small 1 to 3.4, but if you would have let price run, and you see these highs right here, that's easily a 1 to 5 risk to reward ratio. Now this is the very interesting thing. Let me take this off. Notice how I said price didn't come back to retest it. Well, if we scroll to the right and we look at this setup here, this wick, hold on, let me remove this so you guys can see this. Better yet, I'll move it out the way. This wick right here end up mitigating this mitigation block. So that's where price touched. And once price touched it, look. Do you see this runoff? Like, this is A1. You couldn't have asked for anything better. And it's not just these 2 days. This happens, as you can see, I got the yellow lines. This happens consistently with this pair, because this pair, like, this is my favorite pair. This is my favorite pair. Like, it does this, and it's not hard to catch. It's not trickery. All you need to know is the daily trend. You need to mark your 0000 timestamp, wait for a liquidity run, and then a market structure shift, and enter the trade. From here to this high, I'm not saying that you would have caught this, or not saying that you would have held it that long, but let's just say if you would have caught this mitigation right here on a retest, and you seen that price made this high right here, from that high to that right there, this is a 1 to 6.4, easily catchable. You just had to let price run. After all of this plan, it shot up and took off, and from that entry to where it's at now, you have a 1 to 9 setup. No drawdown was faced. Easy example. Just find the daily trend. Wait for 0000 to show up. Wait for a liquidity run. Wait for a market structure shift. Enter the trade, sit back on your hands, and if it don't work, nothing in this market is guaranteed. So if it doesn't work, like, don't even trip. Wait for the next day. This is not required for you to sit on the charts all day. This is something that you can just execute. I work in the morning, so this is something that I try to stay up for and stay up late and catch this, and then I set my stop loss and go to sleep and don't even worry about it. When I wake up, I either hit my TP or whatever. But if you're working overnight, this strategy is A1 sauce for you. I guarantee you. If you don't have to believe me, I'm not asking you to believe me. Go back and back test this for your own, benefit, and let me know. Comment, like, share, subscribe, and give me feedback on this strategy and what y'all think, because it's been working for me. I capitalized off of it. I make some money, and JPY is cheap to get in. It's very cheap to get in on this pair. You can get in with a decent size lot size. So this is something you guys should really look into. I think this pair is beginner friendly, and yeah, let me know what y'all think, man. I'm out.